Discipline and consistency are bridges between goals and results in Forex. Welcome back again to another amazing week of analysis. This is Joebaks FX. If you are still finding it difficult on mastering Forex, watch this video to the end as I go on top-down analysis for this week. Briefly, let's go to the XY. As you guys know how we do it. This is the dollar index pair. As you can see, the market has been on a ranging market for months, right? This is what we can just see from a weekly time frame. The market has been ranging for months. That's why you're seeing the top resistance and top support. It has been in the middle, so we're not going to do much here. So we'll go to a daily time frame. Now what can we see on a daily time frame? On a daily time frame, we see that the market is in a sort of a downtrend. Guys, see, the market is going down. That's all we can pick. This market is going down. Having established that the market is going down, we now see that the market has been creating a series of higher low. When you watch the video I did last week, I actually explained this. A lower high and a lower low. Rather, guys, a lower high and a lower low. This is it. Look at it. Lower high, then lower low. Now that's what the market did. It also created another lower high again. So we expect the market to go and create a lower low and get to this point. This is where we are still expecting the market to get to. Alright, so for the past 5 days the market has been going up, but does not get to this zone of resistance. So when the market gets to this zone, we expect the market to reject, at least come to this place. Okay guys, so let's go straight to our currency pair to analyze our currency pair. First and foremost, if you are new to this YouTube channel, kindly hit the like button, hit the subscribe button, and turn on your notification bell for more content like this. For returning subscriber, don't forget to comment, guys. Thank you for subscribing. Now we're going to look at EURUSD. The market actually has been selling, so the market is currently retracing to the buy. So we expect the market will buy a little bit, then to sell. That's for the dollar index. EURUSD is directly opposite. The market actually sold, but it does not get to this point. Look at it. It doesn't get to this SNRC point. So what are we still expecting? This is a daily time frame. When the market opened on Monday, it's the same pattern, right? Since it's opposite to our dollar index, the market will enter into this zone and give us some sort of a pattern. We wait for confirmation, and then we are buying up to this zone. That is for our EURUSD, guys. Now let's get straight to our GBPUSD. What do we have for our GBPUSD? In the same vein, our GBPUSD, you can see the market has been in a sort of retracement. The market sold, so we expect the market to come down. The market has actually dropped to this zone, so we expect that the market, once it dropped to this zone, there are some reactions that will happen here. What are the reactions? We look for pattern. Actually, there's there is a trend line that is in that zone as another confirmation, but this is what we expect. The market will down and will play around this trend line, and then it's going to buy up, right? Guys, we are bullish this week. Now let's go straight to our gold. Now let me show us what happened on our gold. Now last week we predicted that this market on gold is going to buy. You guys can see this was the trade I took last week on gold market. Let me go to the H4 time frame for clarity. This was a trade I took, and it smashed the TP and is going upward. So what are we expecting for gold? This is it. We are expecting for gold that the market, we are expecting that this market will get up to this point. We are expecting the market to get to this point. This is where we are expecting the market for this week to get to. But before then, how are we going to enter? We wait for the market to give us a sort of opportunity, in the sense that around this zone, this market has to, now we have probability 1. The market comes to this zone, we watch carefully at about this zone, if this zone actually held it, so may I expect that the market will get to this point from this zone. But if this zone do not hold this market, then we will be expecting that this market, when it comes to this zone, when it breaks, is going to give us something like this, and then the market will come to this zone. When the market tap into this zone, it's going to use a sharp rejection. Then we'll be expecting the market to buy up to the zone. If the market is very much volatile, guys, this is for gold. So we're expecting around 400 and something pips either ways, guys. You can catch this market either ways. Now you can look for sales around this zone, and then we expect that if the market sold and come to this zone, you see about 470 pips, guys, then we wait again before the week runs out. Once the market get to this zone, we'll be looking for how many pips, guys? We'll be looking for around 800 pips, of which it may not be possible, because you know the market move around 400 to 500 pips, but there's nothing cannot happen with gold. So guys, Joebaks FX on your way. Don't forget to comment if you found this helpful. See you in my next video. Peace out.